Hi, everybody, and welcome back to another edition of Roof Talk by Elite Roofing Supply. Today, we're going to be talking with Ashley Ingle. Ashley is the CEO of Profit Matters, a full-service accounting and bookkeeping company that specializes in construction companies. Ashley's not only the CEO of Profit Matters, but she also is the owner of a concrete company herself and really has a deep understanding and knowledge of construction and how to set up your books, how to finance your business, and how to deal with your cash flow. I hope you will get as much out of this episode today as I did and get a great understanding of how to better manage your books, prepare for potential downturns, and to manage your cash flow. Okay, here we go. Hi, everybody. Welcome back to another edition of Roof Talk. Today, I have an old friend that I have worked with for many years. We do podcasts together. We do all sorts of stuff. I have Ashley Ingle. Ashley is the CEO of a company called Profit Matters. Profit Matters is an outsourced accounting firm. See, I'm going to even do your pitch for you, Ashley.
Go for it.
They're an outsourced accounting firm with a really strong focus in the construction industry. And Ashley might not look it, but she's a construction gal through and through. I mean, she owns a construction, like she gets it, like this is a family thing, right? I mean, you've been doing now concrete, I think, right? Well, Ashley, maybe tell us a little bit about your background. Like you've been around the game here.
Yeah, in manufacturing way back when, and then went into the construction business, and we are still heavy in construction in our home, both me and my husband, and really in the concrete space. He's a general contractor, so we're familiar with the subcontractor space and the general contractor space for sure. But yeah, we've definitely poured our fair share of concrete and dealt with all the nuances and the ins and outs of construction.
Well, and I think what's very unique, and you and I've talked about this many times now, but construction accounting is a little bit unique. There are some nuances to it. There are some compliance things to it. There are some ways that you have to manage your projects and your books that are a bit unique to, to this industry. There's holdback, there's all sorts of things that can happen in construction. Now with roofing in particular, jobs are a little bit faster unless it's commercial or insurance. I mean, insurance can be something, we all know that hailstorms, this is every roofer out there, all they want for Christmas is a hailstorm. We all know the game. We know that when there's hurricanes and tornadoes and those kind of things, that we're somewhat weather related. But let's talk a little bit about, just general accounting when it comes to contracting. And then I'd like to talk a little bit about, cash flow, credit worthiness, those kind of things, because we are entering potentially a downturn, which means that we've got to tighten ourselves up and get a little bit better of thinking about these things. And we need to make sure that we're creating enough cash reserves and have enough credit worthiness that if we need cash to get us through a storm, both figuratively and literally, we have that available to us.
Right.
So talk about construction in general. What are the nuances with construction that make it a little different than, a coffee shop? And then let's talk about cash flow and credit worthiness.
Yeah, so you talk about a coffee shop or other businesses where you're exchanging a product for money. It's different in construction because a lot of times you're exchanging a service along with materials and you're not getting paid for a really long time. So especially if you think about, at my house, if we put a roof on, we're going to have the insurance company cover that expense. And that means if you're the roofing contractor, Derrick, I'm not going to write you a check. For the most part, right? I mean, you may be getting a check or you may be getting a deposit, but in most cases, you're getting whatever the deductible is, and then the insurance company is going to pay the rest. So you have to try to live on the small amount of money, or you need to live on the money you've made a long time ago. And in roofing, you have pretty good margins for the most part. So that means that when you make money, you have to hold on to it. And so you really have to understand how to manage your cash flow. And it's just because you have a delay in collecting. So you've bought your materials, you've paid your subcontractors, and now you need to collect the money so that you're not in the negative after paying them.
So let's talk about that in particular when it comes to cash flow, because it is a challenge in the industry, right? You can find yourself, it's not like a coffee where you get paid and you hand the product to the person. You can have long periods of time where there's delays, and you can have, homeowners that maybe have the ability to just pay out of pocket and get reimbursed from their insurance company. But let's be honest, the majority of Americans aren't just sitting around with $15K that they're like, oh, here you go, and I'll get my money back later. So that means that you've got to rely upon things like your credit, or your cash reserves. So let's talk a little bit about cash reserves in first. When you're advising people in the construction industry, what do you want their cash picture to look like? Like, are they holding on to a month's worth of revenue? Like, what do they usually try to get?
Yeah, we'd like to have you hold on to 3 months worth of revenue if you can. But here's the thing, in construction, you need to have what's called working capital. And so you need to know your working capital. And so if you think that you have to cover the entire job for 30 days, then you only have enough cash to do the number of jobs that you can cover for 30 days. This is a real thing, okay?
Yeah.
So think about it. If this job's going to cost you $5,000 to do, and you're going to get $10,000 from your client, right? Then you have $5,000 that you need for 30 days. If it's going to take you 30 days to get paid, if it's going to take you 60 days to get paid, well, then you need that amount of money for 60 days. So you have to think about, if I need $5,000 for one job, if I have 10 jobs, I need $50,000. If I'm going to do the same amount of jobs next month and it's going to take me 60 days to get paid, I need $100,000 in the bank. So you always have to think about, like, what's my working capital? And there's a working capital ratio, and those are the things you should be asking your CPA. So if you're worried about cash today, go ask your CPA, how much working capital do I have? And they can tell you how many jobs you can safely take on without running out of money.
Right. And we've all done this, right? We've all been anything in contracting and service work. We've all been lean, where we're like, oh boy, this is going to be really tough. So one of the ways to get around that is trying to have a line of credit, right? You can work with your bank. Right. I think a lot, my general contractor, he runs a lot on his Lowe's and Home Depot credit card, right? He has worked over the years. He's actively calling every, few months. Hey, can you raise my limit? Can you raise my limit? He's trying to keep it as clean as possible because credit worthiness is a really big deal. And it might be tricky for you to get it in your own name. Like there's a limit to, like my business credit cards, my limits on my business credit cards are 10 times what they are on my personal credit cards because it's based upon the credit worthiness of my business. And I think the creditors, the Capital Ones, the Chase of the world, the Amex, they look at it a little differently of you need this, like this is working capital. You have to keep this flowing. If you miss a payment, you're jeopardizing your whole business versus just missing a payment as an individual where you're jeopardizing your credit. It's a little more difficult to get the credit, but once you've got it, you really have to work it.
That's right. You just made the best point. So there's a couple of ways that you can save cash. Right. And that's by opening up accounts with big wholesalers that are going to give you net 30. And so you have 30 days to pay. So you don't have to pay for your materials until later. It's your subcontractors. So you really need to make sure that you have the money to cover your labor because those are things that you usually cannot push out 30 days. So you're paying those guys usually every Friday, no matter how much progress they've made, what's going on, they're going to leave your job if you don't pay them, right? But if you have a line of credit, like you said, then you can use your line of credit to wait. And all you're doing really is you're just using the money that you're going to receive in the future. And so if you're profitable on all your jobs, a line of credit is the best thing that you could do. And then setting up terms with your vendors is also because it's really like a free line of credit because there's no interest when you pay your vendors in 30 days or 60 days. And there are some really great vendors out there that know that you really are going to pay your bills and you're going to spend a lot of money with them. And those guys may give you more than 30 days. You just have to ask.
Yeah, and I think that's one of the things that I have noticed in working in credit departments and advising credit departments. It's shocking to me how few times the contractor or the client calls in and asks for an increase because we do try to accommodate. I work with a company right now where we deal with this a lot, but it's probably 1% of people that actually call and say, hey, look, I've been faithful to you. I'm buying my product from you. You currently have a $5,000 credit limit for me. I'd really like to see how we get that up and sort of put the ball in their court. And then once they say yes, say, hey, look, when will we be able to review this again? Like, is that 30, 60, 90 days, 120 days? How much do I need to be paying on this? What kind of payment history do you want to see? Or are there other things I can do? Can I put a credit card on file? What are other things that I can do to increase that limit? Because to your point, that is huge. And I don't care how small the credit limit is, even if it's $5,000, you have to actively work it. And you and I talked about this recently. It's like, look, holdbacks with some aspects of construction where you have to hold back a certain percentage of the job. That is a little bit subjective. I mean, they might say 10%, but you can say, well, what if we submit our financials each month? What if we do a quarterly review with you of our financials and let you see our bank statements? Oh, okay, now I'm getting more comfortable. Like, I get it. I can see where you can pay this, and I'm going to increase that limit, which is going to help you with the cash flow. It's going to help you be more profitable. It's going to help you take on more work, because nobody wants to say no to work because they don't have enough cash in the bank to float.
That's right. That's the problem. And so that's where contractors get themselves in trouble, because you get $1 million job and you're like, I just want this $1 million job on the books. I'm going to make 200 grand off of it. And so you take the job, but you don't have the capital to actually do the work. And so that's when you have to make sure, like, yeah, you can take the job, but take that contract to the bank. This is another thing.
Yeah.
Okay, I'm not going to give you $1 million line of credit. But when you get a signed contract and you're working on a project, it's much easier to take the contract to the bank and say, I need the money just to do this one job. And so they're looking at that project and they're going, okay, you're going to make money on it. Let us see your estimate. And they'll start asking you some questions and they'll work on it. And so that's one really great way to do it. But I'll tell you, the companies in construction that I've seen be most profitable and also maintain their cash balance are taking a deposit. So if there's any way to take a deposit, you're at least covering your labor, and then you have your terms on your materials. So companies that I've seen do this really well say, we're going to sign this contract with you, Derrick, and we're going to do your roof, but we need 30% down, and then we need 30% the day that we show up, and then we need 30% the day that we finish before we leave, and then you can pay the remaining 10%. Upon completion, we do a walkthrough. You think the job looks great, and they're really only holding your 10%. So if it's not insurance related, the client's going to pay it. They're getting the check later, something like that. If you set up some payment terms, even think about it, the 30% deposit and the 30% the day you show up, you're 60%. You're paid.
You are paid. And then if you have a little bit of a credit limit, right, or you have terms with your vendors, now you've got some advantages there, because now you have cash flow. And I think this is one of the things that businesses miss out a lot. They think about how much they sell, and they might even know how much they make, but they forget about the cash flow piece. And honestly, cash flow will kill you faster than anything else. Yeah. Not being able to make payroll. And there are some ways to do that. I mean, you mentioned this. Talking to your banker, establishing a relationship with a bank. And I'll tell you that you're probably better off trying to get a local credit union, a local bank that has some sort of community relationship. Maybe it's a referral from somebody in your network, but being really transparent and honest with them. And I think this is why maintaining good books is such an important thing, because many of us, we might have a tax person and we save a bunch of receipts. And I have a family member that owns a construction company, and he just shoves everything in a box. And at the end of the year, he goes to his accountant and says, can you figure all this out? And I keep explaining to him, I'm like, do you understand, if you were working with a bookkeeper that was actively managing these things for you and saying, hey, you need to be careful and look at this. And you know what? Here's your quarterly financials. Let's have a conversation with your bank about establishing a credit line, and you track time on your work. So when you sit down with the banker, you can show him to the minute, okay, I know exactly what this costs, and here's all the math behind it, and here's a spreadsheet that proves it. That's what bankers want to see. And if you can't get a bank to buy off on that, you likely could get a local investor to buy off. And it's called factoring. And I do it. I mean, I've invested this way before. A lot of people have. But finding somebody that can lend you that money, that you can pay them back and give them a little bit of interest, establish some sort of creditworthiness that way as well. Creating those fallbacks is really important for any business, particularly when it comes to money. Having access to cash is really critical.
And then you just made a good point, knowing what the job is really going to cost up front. And so a lot of contractors think they know what the job's going to cost.
Yeah.
They don't really track what's happening in the past and what's going to happen in the future. And so really making sure, like, I do know my costs. I know how much the job's going to cost, and you know what to expect going into it. I think that's really important. And then the number one thing we hear in construction is, well, I'm looking at my profit and loss, the income statement in QuickBooks, and it shows that I'm making money, but I don't have any money in the bank and I can't wrap my head around it.
Yeah, because cash flow, right? It's all your money is out. Well, I love, Isaac Barlow from Busy Busy. I just recently interviewed him, and he said something really interesting. He said, we have to estimate, we have to execute, and then we have to evaluate, right? We have to look after the fact, and we have to say, what can we do better next time? What are the three things we can do better? What are the three things we wish we could do right every time? What do we learn from this job? And a lot of that really is about, tying it back to cash and figuring out how much cash is available to us. What are we going to do with it? Those kind of things. Tell me a little bit about what are the mistakes that you see contractors do? We've all done this. When you're starting a business, you rarely hire the accounting team until after you get some sort of notice from, the IRS or the state or whatever that is. Or some of my horror stories, hired, well, my sister-in-law can do it. Mm-hmm. My wife will figure out how to run QuickBooks. Oh boy. I mean, it is true. Anybody can enter stuff in there. That doesn't mean you know what you're doing. So what are the mistakes that you see contractors making, and how do they best avoid that? At what point should I bring a bookkeeping firm or accounting firm in?
Well, if you bring a bookkeeping or accounting firm in the very beginning, it's not very expensive because you don't have a lot of activity. So I would say you need a real accountant to set your QuickBooks up so you have the right chart of accounts, the items, the services, the products. And the number one thing that I see contractors doing is not having their financials timely closed. So you think you know what's happening, but you go, I'm going to reconcile just for my taxes. And so 12 months later, you go, holy crap. I was making way less money than I thought I was making. Once you see okay, my truck had to be repaired, and then we had to lease another truck for the sales guy, and then their commission was higher than I thought it was going to be. So all these things that weren't the materials or the labor to the job, these fixed costs for advertising, for rent, they all really start adding up, and you go, man, I could have had a building half this size and been just as successful, or maybe I didn't need to spend $20,000 on the website, but you don't see that because you're not looking at it in front of you. But the number one thing in construction I can tell you is do the job costing. So are you making money on the repair or the new residential roof or the commercial roof? But understand what is your company's sweet spot and where do you really make the most amount of money? Because then you can focus your sales efforts there.
Well, listen, I've had clients in the past, and this isn't mostly in manufacturing, but that when we've gone in and really done an evaluation of the things that we do, we found that there's certain things that we do that are wildly unprofitable. And the best way to regain profitability is just stop doing those other things.
That's right.
If you're doing residential and commercial and new builds and you're taking any work that you can, that's okay in your first period of time, right? That's okay to start out doing that. But at some point, you really do have to evaluate and sit down and say, okay, are we good at commercial, right? What are we specialists in? So it's really important to understand that specialty. You don't find, particularly in roofers are specialists for the most part. Most of them don't pour concrete on the side. Most of them aren't doing HVAC work on the side. They're very much specialists, but even getting more narrow on your specialization. Lao Tzu, who's a great, Chinese, philosopher, said, if you want to obtain knowledge, add something every day. If you want to get wisdom, subtract something every day. And I think that you could apply that same thing to business. And you could say, what are the things that we're doing? We're adding knowledge at the beginning. But at some point you get wise and you say, what shouldn't I be doing? And that's really critical. And I do think, and listen, Ashley, we've known each other for years, and I've been a client of yours. You've been a client of mine. We've seen it, right? We've seen how this works when you don't do it right. And if you don't set it up right from the get-go, it actually costs you more on the back end because fixing. Yeah. Right? I mean, think about it. We're all in construction. Fixing a roof that somebody put on really shoddily actually costs more than putting it on right in the first place. People look at it and say, I don't want to spend money to have a bookkeeper. Trust me, you don't want to spend money to not have a bookkeeper because that's what you're still going to have the same problem. And I think to your point about cash flow, the problem is when the truck payment comes in higher, or the commission comes in higher, your expenses come in higher. What do we rob money from? And we rob money from the money that we owe to Uncle Sam. Usually, we pull it out of the. You and I've seen this. Well, are you up on your payroll taxes? Well, I mean, technically, no, you got to pay that stuff.
Yeah.
There's a liability to it. So making sure that you've set your business up properly from the get-go, I think, is really important. The sooner you bring in experts that understand finance, the better you're going to be in the long run.
Exactly.
So what advice do you have in 2023? I mean, you are still in the construction industry. You have your pulse on, the industry. I think as a whole, you see what's happening. What are you seeing for 2023? And where do you think, where is our time as contractors best spent this year if we want to do back of the house stuff?
Okay, so accounting wise, I would say make a budget and then do your cash flow forecast based on your budget. And for your budget, one of the most important things is understanding what do you need your sales to be every month, and then how many jobs does that really equal? And so I know for roofing, one job may be 10,000 and the other one may be 50,000, but where are we looking at our sweet spot, what we just talked about? So budget and cash flow, the two most important things you could do. But for 2023, I think we're all going to see a real dip in the economy, and it's a time for you to go out and negotiate pricing with everyone. Tell subcontractors you can keep them busy, but it's going to equal this amount, right? And so you can negotiate on labor. We're seeing more people available for work. We're seeing material prices are starting to come down. And so this is when you say, you know what, I can go and I can shop other vendors. I can make a deal with somebody else. I'm going to spend $1 million on roofing tiles this year. If you don't want to sell them to me at this price, I'm going to have to go talk to the other person down the road. And most of the time you've established such a good relationship, they don't want to lose $1 million account.
No, nobody wants, losing a customer is that's way more painful than anything else. You can gain customers, but you want to keep the customers you have, so you want to keep them satisfied and happy, and give them more. I mean, honestly, I don't want to give too many. This isn't an infomercial for Elite Roofing, but what I love about I do operational consulting work for them, but I also do some podcasts for companies, and they were like, we want to give back to our contractors this year and help them, provide them with tools and resources and point them in directions that are going to help them navigate this storm and come out on the other end more successful than they were coming into this thing.
I love it.
So how do people find out more about Profit Matters and what you all do?
Yeah, go to www.profitmatters.co. It's just .co. You can shoot me an email, ashley@profitmatters.co. We'll include that, I'm sure, with this.
Yeah, we can pop it up there on the screen too.
Yeah,
it's been great, and I think it's such an important part of business. For the most part, many of us in the construction industry, we're not MBAs, right? We didn't go to business school to learn how to run a roofing company, right? We learned it as a part of a trade. We learned it from a mentor, somebody like that, and it is really critically important to make sure that you get your ducks in a row. No successful roofing company is out there that doesn't have a good accounting back end, and if you're out there without and you're lacking that piece, you already know. And I think one of the things that's so great with working with an outsourced sort of bookkeeping service in any way is that you have a little bit more surety on the numbers are right. You got somebody that knows what they're talking about, that has tax experience. It's helping align your books with the tax law, making sure that you're making the most amount of profit. But I think even more important than that, just being that sort of canary in the coal mine where you can say, hey, wait a second, Joe. Did you happen to look at that last project that you bid? Because you didn't do a really good job of it. And we need to really reconsider doing that type of work. Having that type of device is just invaluable to growing and succeeding in business.
Hey, Derrick, you just made a great point. This week, we saved somebody $2 million in taxes on this next year by switching from accrual to cash because they have a collection issue. They were going to pay $2.1 million, and we reduced that to about 1.2. Just looking at the analysis. Now, revenue-wise, we may have to switch back to accrual in future years, right? But for this year, when it was really important to investors to not have to pay that additional money in tax, there's some things we can do like recording bonuses on the balance sheet that we're going to pay out in the future. In roofing accounting, there's some things we can do where we defer revenue and we move some things around based on work in process. And so there's a lot of creative accounting that your tax firm can do. And we do taxes at Profit Matters. So we'd be happy to talk about it and take a look with you at no cost, do an analysis of your taxes and see what we can save you.
Well, and listen, I mean, unless you're a roofing contractor and you're driving around listening to accounting podcasts and reading accounting books all day, isn't it just better to have somebody else that knows all of those kind of things that you can do legally?
Yeah, we're
You can do.
We're not avoiding it. We're not.
No, right.
We're pushing it out to future years. That's what
Exactly.
people legally save you money in taxes. You are going to pay it. You're just not paying it yet.
It's when. And listen, I mean, tax laws change. Lots of things can happen between now and then. My mentors have always said that. They're like, look, avoid paying taxes as long as possible. When it is time, if there's a good change in the tax law, let's pay it all then. Like if there's something comes up where they're like, because of the economy, maybe they say, hey, for one quarter, we're going to drop the capital gains rate or something. Okay, let's do it now because now it's advantageous to do it. And so I think those are the kind of things I think we miss so much. We probably leave more money on the table than we really make in the end. And a lot of that is just bad planning, not having our books accurate, not knowing our costs accurately. And I've talked about this in this podcast a number of times, and not knowing how much time it takes to do something. And when I say time, I'm talking about how many seconds does it take to mud a sheet of drywall? Those kind of, how long does it take to put one bundle of shingles on the roof? How long does it take to put gutters on it? Those things are super important, and they get overlooked because we're very busy doing the work.
That's right.
Thank you, Ashley. This has been really great. And thank you all for tuning in to Roof Talk, where we talk each episode about ways to improve your contracting business. We do want to help you, our customers, the roofing customers that are out there. But listen, just general, there's a lot of great general business advice on this show too. So please make sure you like and subscribe and continue to tune in. All right, until next time. Thank you, Ashley. What a great episode, learning about how to better manage our money. Next week, Sarah Weiss, the CEO of Elite Roofing Supply, is going to be with us. We're going to talk about Elite Roofing Supply, its history and background, its growth trajectory, but we're also going to talk about passing off your business to the next generation and succession planning. Sarah is the CEO. Her father was originally the founder of the company, and she had to earn the right to run Elite. So I'm excited about that interview. I think you'll find it very, very interesting. And make sure you like and subscribe here to Roof Talk by Elite Roofing Supply. All right, until next time.